Hi, welcome to today's episode of Casual Corner. I'm here with my colleague, Keyshawn Wilson, and we're going to be answering all of your questions that are frequently asked about life and pensions products. So a question I get a lot is, when is a paramedical required for life insurance?
So a paramedical is required for all adults over the age of 17. If you are from 0 to 17, you can have the coverage without the need of a medical.
And if you don't have a medical, so you buy a child's policy, do they then need to have a medical later on in life?
No. So they preserve their insurability from young, which means they won't need to go see a doctor, and they have the coverage essentially permanently without having a medical under the age of 17.
That's an excellent reason to buy life insurance when you're young, isn't it?
Absolutely.
Or for your kids too.
Absolutely. And health does play a huge factor. You know, life insurance is not a privilege. You still have to qualify health-wise. People who smoke are more at risk, so they have to pay more for the coverage. People with underlying health conditions have to pay more for the coverage because it's linked to mortality at the end of the day. You know, if there's a greater risk that, you know, your health is a concern, then the coverage is going to cost more than if you're perfectly healthy and expected to live a long, fruitful life. So, Mel, I've got a question to come back at you with, and it is, when should I be conservative or moderate or aggressive when it comes to my investment profile?
So that's a really good question, and not one that many people understand. In the past, being in a profile at a certain age was the gold standard. So as you approach retirement, you kind of shift your risk tolerance back from aggressive in your 20s to conservative in your 50s. I like to say it's not a one size fits all, so it does depend on you and your financial background, how much you have saved outside of your pension. If you have to safeguard it, I'm going to suggest you step back your risk tolerance. If you can afford to take on a little bit more risk as you get older, you can stay aggressive for as long as you like.
Yeah.
It all depends on the investor themselves.
Okay. That's interesting because I remember that concept being told to me, you know, while you're young and you have time, be aggressive, be aggressive. And when you're old, be more conservative because it's less risk. But there's no personal goals built into that concept. You know, it's very robotic. So I do agree.
It all factors down to time as well. Like, how long do you have until you retire? If you have time, which is invaluable in investments, you can wait out any fluctuations in the market. But as you approach retirement, you might not have enough time to wait out, a down market before you have to start touching your funds.
That's a very good point.
The more time you give your pension, the better off you're going to be. So, Keyshawn, I know that life happens. If someone comes in and gets insured for a lower amount, can they change their coverage amount later on in life?
So yes and no. The answer is yes, in the form of if you need more coverage, you can request more coverage, but you cannot increase a policy contract later on in life. You can only reduce a policy contract. So if you had $1 million in term, mortgage decreased to $500,000, you want it to decrease to $500,000 for the remainder of the term, you can do that. You cannot increase life insurance coverage. But what you can do to increase your coverage is take out more than one policy. So let's say you have one term policy for X amount for X amount of years, and you decide to purchase another house, or you decide to purchase two houses, and you wanted to protect that value, you can have a policy for that as well.
That's an interesting segue. So I didn't realize that you could use it to essentially two policies to insure two different assets.
Yes, you can.
That's an excellent way to use it.
Yeah.
I never thought of
You
that.
definitely can. And that's where the whole and term combination can come into play. For one, you can have a protection plan for term to protect your income. You can have a whole of life plan with that, to coincide with it for your creation goals. And then you can have one separately, specifically for the 30-year mortgage for $1 million or $500,000 to protect that. And then you might own a business on top of that, and you want to protect your most valuable employee and have a key man policy. The idea with life insurance is you can protect whatever it is that you need protecting. It just has to make sense financially. You can't be protecting more value than it makes sense to protect or that you're able to create yourself.
Okay, that makes sense. Thanks, Keyshawn. Thank you for joining us today on Casual Corner. If you have any questions, please feel free to reach out to us.